Hot Business is powered by Standard Bank Business and Commercial Banking, recognized as the best Pan-African bank for SMEs. For tailored solutions and deep sector expertise, search Standard Bank Business and Commercial Banking today.
The 2026 national budget brought a number of tax adjustments, and some of them have direct implications for foreign nationals who own property here in South Africa. Let me explain. From rental income thresholds to capital gains tax and VAT rules, these changes, as I understand it, could affect both the tax bill and compliance obligations for overseas investors in the local property market. So let's discuss this in a little more detail. Nicolas Botha is with me, Tax Team Compliance and Processing Manager at Tax Consulting South Africa. Nick, a very warm welcome. Let's start with the big picture if we can. What, in your opinion, then, were the most important Budget 2026 tax changes that affected foreign property owners in South Africa? What stood out?
Thanks, Jeremy. From my perspective, we look at what does a foreign national typically generate in South Africa. So for me, the tax brackets being adjusted for inflationary changes for the first time in 3 years was quite vital. So that just impacts in terms of the tax-free threshold for rental income. And then also importantly, you've got the exemption changes from a CGT perspective, which increased to 50,000 Rand per annum, which would then assist them in terms of, disposal of property and leveraging on that.
All right, lots to talk about. Let's get to CGT in just a minute. That's capital gains tax. But before that, let's talk about the threshold. As I understand it, many foreign investors would assume, correct me if I'm wrong, that if their income is below the tax threshold, they would not need to file. That's an incorrect assumption, is it not?
That's definitely an incorrect assumption. So although the brackets and the threshold has changed to pay taxes, it's very important that they still do their filing obligations, which if we look at the law, there's a 30,000 threshold on rental income.
Now, when a foreigner sells property in South Africa, let's talk about capital gains tax now. That increase that you referenced from 40,000, I think you said, to 50,000 in terms of the CGT exclusion. How meaningful is that increase?
So it is fairly meaningful. Roughly, there's about a 20,000 Rand increase in terms of the gain that you can have. So when we look at it now, you've got a tax-free portion of 297,500 Rand on the gain if that's your only income for the year of assessment.
The budget, Nicholas, also raising the primary residence exclusion, and you'll need to explain that to me, to 3 million Rand. Under what circumstances then can a non-resident use that benefit?
So this is where it becomes quite complex, in terms of the exempt exclusion.
Okay, make it easy for us, Nick. People have had a hard day.
Basically, what it means is that if it is seen as your primary residence, so it's the place that you would ordinarily reside in, you can then exclude the capital gain by 3 million Rand. Now, the problem that foreign nationals face is that term closely links with tax residency tests. So if you are a foreign national and you apply that to yourself, you must just be very careful that you don't incorporate your worldwide income and expose that side of things for a quick saving.
So how difficult is that burden of proof then?
Is quite complex. So when we look at the two terms, the one is ordinarily reside, and then the other is ordinarily residence. So those two very much overlap, and you would need detailed planning around your tax residency status in South Africa to say that you are not ordinarily resident of South Africa, although you ordinarily reside in South Africa. So you can see where that really becomes a fine line from a law perspective.
All right, we've looked at capital gains tax. Let's talk now about the VAT registration threshold, as I understand it, jumping from 1 million to 2.3 million. That would seem fairly substantial, but there's a suggestion that could be a disadvantage for some property investors.
Correct. So for your ordinary investor, that's buying a house, that's maybe going to Airbnb it on occasion, you're likely not going to get to the 2.3 threshold, so it's a very good saving for them. However, if you are a foreign national, they tend to have euros and buying a bit more affluent properties. They might buy a property that is already VAT registered. Now, if they no longer intend to rent it out and perhaps are going to use it as a holiday home, they won't be able to claim back input VAT. And so that's where there's a loss on typically your higher investors.
I would be correct in saying, I think, that many foreign owners would hold property jointly with a partner or a spouse. How does the tax treatment change then when rental income or capital gains are split between partners?
So that is highly beneficial. So most other countries tend to have joint filings for spouses, where South Africa just works on an individual basis. So both would file, which means that income is joint and therefore can be split 50-50 between, you and your spouse. So equivalently, if we look at, the rebate threshold, you've got 99,000 tax-free, which then with the spouse then jumps to 198,000 tax-free, whereas the capital exclusion as well would normally be 297,500, which is now then both of you get that benefit. So typically it's advisable to jointly own a property if you're a foreign national.
And a lot of rental property owners, I imagine, would be treated as provisional taxpayers. Are there deadlines or filings that foreign investors need to be aware of that might have changed?
Certainly. So a provisional taxpayer is a little bit more complex. Instead of filing once per annum, you're filing 3 times. So you must make your first provisional payment prior to the last business day of August of the relevant year. The second provisional payment is then made before the last business day of February. And then you would also then finalize that year of assessment with your annual tax return, which typically runs between July and January of the next year.
So just a final one then. When you look at the overall picture emanating from the budget, where do you think most foreign property owners go wrong? Is it the tax itself? Is it the compliance maybe and the reporting obligations around it, or maybe both? I don't know.
From our perspective, it tends to be the compliance aspect, Oftentimes you'll find that a foreign national doesn't have a tax liability in SA, but they still have a filing obligation. So when they forget that filing obligation, they often receive, penalties and interest. So that's what you want to avoid. Is you just want to make sure from the start you bring in the funds properly, purchase the house properly, and then declare the relevant income that you're going to generate.
Thank you very much indeed. Nicolas Botha, Tax Team Compliance and Processing Manager at Tax Consulting South Africa. Appreciate your time tonight.
Hot Business is powered by Standard Bank Business and Commercial Banking, delivering expert support and tailored solutions to help your business grow with confidence, clarity, and resilience.